Good morning. The Minister of Inland Revenue, Mr Peter Dunn, has given a speech to the New Zealand Institute of Chartered Accountants Tax Conference on the planned tax policy work programme for the coming year. This tax policy work programme is set on an annual basis and outlines the sort of things that the Government and Inland Revenue will be working on. He has announced that there is going to be 4 key areas that they will be looking at. They are continuing to deliver the Budget 2010 initiatives, some of which we've already seen, working on the international tax review, including the negotiation of tax treaties and the tax information exchange agreements with other countries, supporting the savings working group, who have been set up to try and encourage New Zealanders to save, because as most people realise, New Zealand are pretty damn poor at doing so. And they're also going to be looking at transforming inland revenue in terms of tax secrecy, the collection of debt and the overall general governance. As well as these 4 key areas which have been designed to try and help grow the New Zealand economy, they've added on a couple of extra things. These are the profit distribution plans, and probably one of the big ones that will affect New Zealand is the valuation of livestock. We'll come back to that one because I think they may be slightly wrong on that. So in terms of the Budget 2010 initiatives, what are they looking at? Well, as you already know, we've had the GST increase on the 1st of October and we're well into that. One of their big areas is social assistance, and in particular the delivery of working for families and the use of community services cards. And when the Labour government brought in the 39% tax rate some time ago, a number of businesses restructured so as to try and avoid that and also gain working for families and community services cards. The government has said they're concerned about the manipulation that is occurring here, and they're going to take steps to try and change it. It'll be interesting to see whether they can, because everybody is going to try and find some way around it, and as an accountant it is our role to try and do the best for our clients, and if we're able to use the tax legislation to their advantage, then why can't we? The other one that they're looking at is qualifying companies, and we've already seen the announcement from the Minister of Revenue about the draft legislation, and there's going to be some large changes coming in that regard. The use of LAQCs will be something that a lot of people are going to have to think about, and if you've invested in property, now might be the time to think about why and whether you should continue with your existing structure. I know we're working on a number of things in our office, and our clients will be contacted in the short future to come and talk to us, and we'll be raising the issues with them. The other one that they're looking at is the transformation of inland revenue, and in particular a complete overhaul of the tax administration system so that it can cope with the future. There's some big changes planned, including the greater use of electronic communication and the internet itself. There's already a number of things that you can do over the internet, such as filing your GST returns, various tax registrations and the like, and they're going to be looking at making greater use of this because it speeds up the process and cuts down the paperwork that they've got to process. Another thing they are looking at is a lot of firms are already using business accounting software, and they're going to be trying to work with the vendors of these so that the delivery of GST and PAY information is automatically made to Inland Revenue via that software, and there'll be no need for other forms and other sort of processes done over the internet. They've set up a special task force or committee within Inland Revenue to try and achieve this, so it'll be interesting to see what progress they make. Now, earlier on I mentioned something that will impact greatly on New Zealand, and that was the valuation of livestock by farmers when they come to do their end of year tax accounts. Given that the primary sector is a big factor in the New Zealand economy, any changes here are going to have a significant effect. They've come out and expressed concern that farmers are exploiting the use of livestock valuations and that it is too easy to leave the herd scheme. To be honest, I don't know where the Minister is coming from, and I actually wonder whether he actually knows what he's talking about. The farmers will already know, and for those that aren't a farmer, I'll briefly explain it. The herd scheme is that every year the government come out with a set value for whatever type of animal you're farming is worth. Now under the scheme you've got to give a 2-year notice to exit if you want to value it under a different basis. How they can say that it's easy to exploit that, I do not know. I know in our office it is somewhat difficult to decide when to exit that herd scheme because you've got to try and predict where farm prices are going. given the state of the world economy and the New Zealand economy itself, who knows where prices are going. And to be blunt, I think the Minister needs to get down to the ground level, actually talk to farmers and see the difficulties they are having, and also talk to us, the accountants, because we're having complete difficulties with this as well. And once you're in the herd scheme, we do know it is very difficult to exit. So what he's saying, who knows? Be interesting to see what they do under this and what his actual intentions are. I wonder if they are finding that the herd scheme is too difficult for them to operate. Well, that's the summary of his speech today. They've obviously got a full program ahead for the year. But interesting to see if they can actually achieve it and whether they can even actually deliver on what they are promising. So we'll leave you for now and look forward to seeing you again later. Goodbye.